Smart money concept is everywhere. Liquidity, order blocks, fair value gaps. It sounds like you finally understand how the market really moves. But here's the problem. If it truly worked the way it's sold online, most traders using it wouldn't still be losing money. The promise is simple. Follow the footprints of institutions and you'll be on the winning side. But in reality, most traders end up marking every chart with zones, waiting for perfect entries that either come too late or fail instantly. The clarity they expected turns into confusion. Part of the issue is how it's taught. Clean charts, perfect reactions, precise entries. Everything looks obvious after the move has already happened. But in live markets, nothing is that clean. Price is messy, fast, and often unpredictable in the moment you actually have to make a decision. So traders start believing the problem is them. They think they missed something. Maybe the order block wasn't refined enough. Maybe the liquidity wasn't clear. But the deeper truth is that the concepts themselves are not a complete trading system. Two traders can look at the exact same chart using smart money concept. One makes money, the other loses consistently. The difference is not the concept. It's execution, timing, and how risk is managed when the setup fails. And this is where most people get stuck, because smart money concept often feels like it's working. Price does react around liquidity. It does respect certain zones. So traders get just enough confirmation to keep going, even when their overall results say otherwise. Now here's the uncomfortable question. Is smart money concept actually something new, or is it just a rebranded version of price action that's been around for decades? Support and resistance, supply and demand, trend structure. The language changed, but the core ideas are not that different. The real edge doesn't come from labeling a chart differently. It comes from understanding when the market is trending, when it's ranging, and when to stay out completely. Without that context, even the best-looking setup can fail over and over again. And then there's the reality of trading conditions. Spread, slippage, news volatility, and strict risk rules. Especially if you're trading something like a funded account. Suddenly, taking every perfect setup is no longer possible. Precision becomes everything. At that point, smart money concept stops being a magic solution and becomes just another tool. A useful one, but incomplete on its own. The traders who succeed are not the ones who know the most concepts. They're the ones who execute consistently under pressure. So, does smart money concept work? The honest answer is yes, but not in the way most people think. It doesn't give you certainty. It doesn't guarantee entries. It only gives you a framework. What you do with that framework is what determines everything. And that's the part nobody likes to hear, because it means the answer isn't in finding a better strategy. It's in becoming a better trader.